Our next guest thinks the clock could be about to strike midnight on Palantir's Cinderella run. Jefferies Managing Director and Senior Software Analyst Brent Thill joins us now. Brent, great to have you with us. What's so amazing, Brent, is that you have a lot of company in the analyst community in terms of not having a favorable view of this stock that has gone gangbusters. There are 13 hold ratings on the stock, 5 sells, and only 5 buys. Why so skeptical? Is it purely valuation?
Yeah, look, we're wrong and we get things wrong, but I think a lot of our other picks have been right. So I'd point to Palantir's fundamentals. There are very few companies that are doing what they are doing. So to give them credit, their fundamentals have been pretty incredible, right? 30% top line growth, high margins. So the rule of 70 to 80 is in play. There are very few companies. You look all week, this week, Google, Microsoft, Amazon, all disappointing on cloud. Where's the AI? And Palantir saying, well, we got the AI. So I think ultimately right now, what's helping Palantir, great fundamentals on their behalf. Secondarily, there are not a lot of institutional investors. I've said this, I do not deal with retail investors. Our clients are institutional investors, and the institutional community is not there in big size. So is that a catalyst? Potentially. I think you go back to the third element is everyone else is not doing well in tech right now. And so ultimately, this is giving Dr. Karp's view of, hey, everyone else sucks and we're all amazing pitch, hold weight. And so, again, I mean, we're at a point right now where the stock is in la-la land on multiple. There's nothing anywhere remotely close to this. Our team, has been advocating there's better ways, safer ways for investors to own these themes around AI, whether it's security and CrowdStrike or Cloudflare. You look at other stories. But when you start to look at this market cap, it's the market cap of Palantir is the combination of Adobe and Snowflake combined. I mean, we've never seen a multiple like this. And I can just give you history when Snowflake, Datadog, and others hit this multiple back during COVID. They didn't hold that multiple, and it was not a good story on the other side of this mountain. They all imploded. They went from 50 times revenue to Snowflake went to 8 times revenue. Wow. So again, we're not saying that happens short term. There's enough momentum and enough goodness in the fundamentals. But I think again, we have to look at it both from the fundamentals, A+ valuation. Again, nothing even remotely close to this valuation.
Yeah, we've been making the same point, Brent, and thanks for being here. And I'll say this: even if you give them, add the $5 billion of cash they have and say they're going to do $5 billion of revenue, make that 10, and then divide it by 230, it's still a ridiculous valuation. So my question to you is, what will be the trigger that says when the street finally says this doesn't, because as you said, we've seen it before. So what are we waiting for? What do we need to see for that trigger to be sort of, I guess, set off?
Well, I think there's a trigger ultimately in the multiple at some point, right? Again, it's gone from 25 times revenue to 50 plus. So, could this go to 75 times revenue? It's in the stratosphere and it's launched and it's there. So the multiple could keep going higher in the short term. I think the fundamentals are good. And at some point, are they going to have a miss on the quarter or not? I don't see anything really competitive that's causing a big issue. And I think the only thing right now is, the rest of tech is kind of sick. You look at the mega caps, even Amazon, again, we're 3 for 3 this week of not making the numbers. And so ultimately, I think there's, some concern around what's going on with the rest of tech.